Greetings, members one and all of the Salivation Nation, with a humbug for us here on this Christmas Eve. As the markets have closed down, it looks like Scrooge is here, and some people would make an argument that the Grinch has stolen Christmas. But let's take a look here. Market Watch tells us about how we had the largest decline ever on Christmas Eve with the Dow and S&P logs. Stocks ended sharply lower Monday in a holiday truncated session, putting key equity benchmarks on track to log their worst month in a year and a decade. I posted a video earlier this morning when we thought we were going to see a little bit of a recovery, but I kind of wanted to play things out and see how it was going to occur, because all of the media were talking about how this is going to be the worst Christmas Eve decline, and it turns out that was the truth. And we're also saying here as a bulletin, U.S. oil prices have taken the biggest drop in 3 months, around tumbling along with the stocks Monday, which is good news for those who drive a lot, for sure. But the S&P 500 slipped 2.7% to end of the year at 2352 based off preliminary numbers. The Dow Jones Industrial Average is down 291, shed 644 points, or 2.9%, to end the year at 21,794. Let's take a look at those more closely, because I think we need to, these are the actual numbers here. And refresh, the Dow is actually down 653.17 points, with an ending session at 21,792.20, a 2.91% decline. The NASDAQ is down 140 points and to end at 6192.92. The S&P 500 is down 65.52 points to end at 2351. With that being said here, the Dow recorded its fifth session with a 2% decline in December, its most in a month since September 2011. Equities saw no respite after developments from Washington put concerns of political instability back on investors' agendas in an attempt to ease investors' fears. Treasury Secretary Steven Mnuchin called CEOs of the nation's biggest banks over market liquidity, but his efforts may have amplified the market sell-off. I've talked about that this morning. Investors also highlighted reports President Donald Trump had discussed the possibility of firing Federal Reserve Chairman Jerome Powell. Mnuchin, however, said Trump denied having made such remarks. And that's just it. There's a lot of stuff that comes out of the news, and, rumors can circulate very easily in the media, and they often do. And that can cause concern with the markets. But with that being said, gold has booked a large 1% jump here. They're reacting. As gold futures settled sharply higher Monday, extending a climb towards a 6-month peak, underpinned by a weaker dollar and a rout in the stock market. February gold advanced $13.70, or 1.1%, to finish at $1271.80. We're going to look at those numbers here shortly. The gold market closed at 12:30 p.m. Eastern Time, an hour earlier on Christmas Eve. The surge for the yellow metal to its highest since June comes as the Dow Jones Industrial Average and the S&P 500 had reached their lows, and to make the worst Christmas Eve since the worst since 2008. That risk-off dynamic has given gold a lift, driving investors seeking the perceived safety of the yellow metal. Well, it's not perceived, it's reality for many of our minds. Meanwhile, the weakness in the dollar, as measured by the dollar index, is down 0.4% at 96.53. Also has helped to lift the precious metals. Weaknesses in the buck can support gold prices because gold is priced in dollars, and a stronger currency can diminish appetite for the commodity for investors using other monetary units. So we can take a look here and see. First, let's take a look at the chart for the Dow Jones Industrial Average here on this Christmas Eve. And we can see that the time I recorded my video was sort of at the peak. The video I recorded this morning was sort of at the peak at where we thought there could be somewhat of a recovery to end a balanced out session here. with minimal losses, but it just kept going down and down, and sharp decline there towards the 1 o'clock close. Now, what would have happened if the market stayed open till 4? It's anybody's guess. It sounds like it could have made a continual drop, but it could be that these could be some manipulations as well, that people are saying, okay, let's bring it down so we have the Christmas Day or what have you and other days to be able to make some buys, get some good deals. Who knows? Who knows how that'll play out for the Dow Jones. But precious metal prices here, we do see a modest increase, 1% in gold here and in silver. Running around the same ratio, it looks like 1% each, and an increase in both. Gold is up 13.47. Here's the actual numbers here. Silver is up, and they're showing 14.80 here and 14.81 down here. But this could be the close as of, for the markets, the New York markets, and these are just continuing ticking through the Asian markets and the like. Platinum is down, and palladium is creeping back up. Still, it took a big hit upon the opening session here when the markets opened up in Asia. It was down like $30, and it's recovered half of that loss, which still brings a little bit now below gold. So gold reigns as king here for the precious metals, and we'll see how that plays out. But nonetheless, it is going to be fascinating to see what happens when the markets open up again Wednesday, to see if there will be a continuous sell-off. It is starting to make me a little bit nervous, because though I'd like to kind of separate out Main Street from Wall Street, but the fact remains is that, they do sort of each influence each other, because businesses out there kind of rely and see what the market trends are to see how things are trading, and confidence in their company's stock and the like can certainly weigh one way or another in the economic indicators. The Fed did raise rates, and I do feel that is playing a part in some of this market volatility. But obviously, we have things like trade and uncertainty, and with the government shutdown and shakeups in the administration, the Trump administration. So we'll see how this all plays out as the holidays come to a close. We have New Year's Day as well. And I think that really we won't know until we find out what's going to happen with the government shutdown. Some are saying it's going to last until January 3rd. And if it continues or does not, and about 25% of the government won't function during that time. And we'll see how that plays with the markets. Anytime where there's uncertainty, it's going to have an effect negatively, mostly in the markets. And then you have that often enough, well, you're going to get some cold feet with regards to buying. And so I think that's kind of where we are at, and with the stock indexes and things of where we're going, coming into the new year. It's going to be an interesting 2019, and I believe that gold and silver are going to probably react a little quicker than they have in prior sessions, or because people are starting to lose a little bit of faith in the markets, and the one place they know where they can go is gold and silver, and so they'll start to make that move in times where there's volatility. So we'll see how that all plays out. It is unfortunate. Is this there's two ways to look at this. Is this could be the beginning of something more serious in terms of a potential and a precursor to maybe a recession of some sorts. But it could also be, in some ways, the volatility could just be exacerbating a natural market correction, because a lot of people thought, I myself included, that when we started to see the stock market really go up, we thought a lot of it was due to the stimulus, quantitative easing and the like, a lot of dollars being pumped in. But I do think that there has been some growth, some real growth based off of real market, free market conditions that have occurred after the tax cuts, and businesses starting to grow, hiring, wage increases and the like. And I believe that is certainly another factor, and I believe that is a real part. But still, it was a bubble on top of another bubble, or a market increase on top of another bubble, and I think that other bubble was probably bound to pop at some point. Just hoping it would. We were just hoping it would have been more of a steady decline to realville, so to speak, than what it was before. So there you have it. On this Christmas Eve, the markets have now closed, and we are going to have a Christmas with a lower market, and we'll have a day where we'll find out what happens when the markets open again and see where it goes from here. I hope you enjoyed this video. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.